So we are doing May, June 2021, paper 11. From back side we are doing. Why might a business prepare its budget? Why will a business prepare its budget? Budget is not prepared to determine skills of labor force, or to see the market share, or to identify the quality of products. Budget is prepared so that you know your future expenses, your future needs. In future, if something is not going to be there with you. Okay, so it is not for all this. Budget is prepared to determine the amount of bank loan it needs. Go to the next one. A trader makes and sells a single product. It has selling price 90, contribution per unit 30. What would be the variable cost?
60.
When 800 units are sold, the profit is 9,600. If 800 units are sold, what would be the total contribution? Total contribution would be 24,000. Minus fixed cost would give you profit. Profit how much? 9,600. So what would be the fixed cost? 14,400. Are you all good with me?
Yeah.
What is the profit if 1,000 units are produced and sold? So if 1,000 units are produced and sold, contribution would be 30 into 1,000. So it would be 30,000 minus fixed cost, which would be 14,400, irrespective of production. So what would be the profit? 30,000 minus 14,400. Profit would be 15,600. How 30,000, can you tell me?
Okay, so first I calculated the contribution.
What
We
is
have been given,
contribution?
Yes, miss, it is D.
we have been given the contribution to sales ratio of 80%. So I calculated it by.
Yeah, can you tell me again?
We have been given the contribution to sales ratio 80%. So we'll calculate the contribution first.
Look, if you want to know the number of units that you have to sell to make a desired profit, what will you do? You will do fixed costs plus desired profit. If you want number of units, then you can write contribution per unit, but you don't have contribution per unit. So you have contribution to sales ratio, that is 80%. So then after that, what did you do?
As fixed cost, we have
4,20,000 divided by 80%. So 525 is the number of is the dollar value that you will get to get the desired profit of 20,000. So if you want to find the number of units, you will divide 525 by how much? 25. 525 divided by the selling price. So you're getting what? 20. How did you get 30,000?
It's because we are getting after content. We are getting.
Okay, 1 minute. Fixed cost is 400,000.
Yeah.
So this is 420,000 divided by 80%. Huh? 525. Yeah, tell me how did you all do?
Okay, so first we found contribution 80 into 25 by 100, and we got 20 per unit.
Sorry,
Contribution per unit, we got 20.
how?
Contribution by X by 25 into 100 equal to 80%.
So 80% or 25? Okay. So contribution you said is 20.
Yeah.
So variable cost is 5. Okay. Then 4,25,000 divided by 20. Yeah, then what did you do?
Yeah, so
Yeah, I know what mistake I'm doing. Profit is of 2 lakh. You want a desired profit of how much? 2 lakh. So 400,000 plus 200,000 divided by 80%. So 6 lakh divided by 80%. So this is 750,000. This you will divide by the selling price. So you will get number of units sold is 30,000. What mistake I did? I forgot the zero. Okay? Okay?
okay.
Come on, do the 27th one.
Sales minus variable.
Okay, 1 minute. Margin of safety. How do you get margin of safety? Actual
Profit
sales minus
actual sales.
break-even sales. Actual sales minus break-even sales. What is actual sales?
230K.
230,000. For break-even sales. Fixed cost upon contribution to sales ratio. What is contribution? Contribution to sales ratio. So what is the contribution to sales ratio?
60%.
138,000 divided by 230,000 into 100. Contribution to sales is 60%. So break-even sales would be 60,000 upon 60%. 60,000 divided by 60%. So break-even sales is
100,000.
100,000. Actual sales minus break-even sales will give me margin of safety. So 2,30,000 minus 100,000. Margin of safety is 130,000. Are you with me?
Yes. I read 60,000 upon 230.
6.
Sales
Yes,
150,000
miss, I
minus
got B.
variable cost. This
Yes,
all is
miss.
variable cost. What was the contribution that you're getting? What is the contribution that you're getting? 150,000 minus 45,000 minus 28,000 minus 7,000. So contribution is 70,000 upon sales 150,000 into 100. Yes. Come on, go to the 26 and 24. Now always remember, marginal costing is used for making short-term decisions.
Yes, it will be A, no?
Absorption costing is used for making long-term decisions. So why do you want to know the contribution per unit? To decide whether to make a product or buy a product, to assess the impact of change in sales volume. So it is A. How might under absorption of overheads arise? What will be the reason that you under recovered any amount? How will you under recover any amount? You charge less. Either you charged less or you worked less. So come on, tell me, how can under absorption arise?
Production was
Overheads have been under
budgeted.
budgeted. Overheads over budgeted, so over absorption. Under budgeted, so under absorption.
To an
Production was less than
A.
budgeted, even this is correct. You worked less. Production was more than budgeted, so over absorption. Under absorption arises either you undercharged or you under recovered or you worked less. So the answer would be option C. Are you all with me?
Yeah.
Come on, go to the 23rd one.
Is it C?
No. What do you compare in case of under absorption, over absorption? Actual overheads is compared with budgeted OAR for actual production. How do you get budgeted OAR?
Budgeted upon budgeted cost upon budgeted activity level.
What is budgeted activity level?
Budgeted activity level is 55,000.
So what is budgeted OAR?
It is 10. 10 into 5500, no? I got 55,000.
So budgeted OAR for actual production is 55,000.
Oh yeah, that is 55,000.
Okay.
Then over absorption of 4,000.
You have over absorption of 4,000. That
So it
means
will
you
be
have recovered more. Over absorption
A.
means you've recovered more. Over absorption means you've recovered more.
So it is A.
So your actual overhead would be 51,000. So the option is A. Are you with me?
Yeah.
Come on, do the 22nd one.
Will the 22nd be A? Or will it be C? 22nd.
No.
A.
B.
B. How?
Footwear is manufactured in batches. Whereas a clothing retailer, you will not have one dress of the same type in batches. Okay, you will have different dresses with a clothing retailer. So
Why we
batch
do
costing system is for footwear manufacturer. Go for the
footwear might be different.
21st one.
So why not stationery?
Stationery you don't produce in batches. Okay, it is a standard thing that is produced. Where winter footwear, summer footwear, rainy footwear, it's produced in batches.
Miss 21B.
What is stepped up cost? It is fixed for a given level of output and then it increases. What is stepped up cost?
Fixed for level of output and increases.
Do the 20th one.
So what was ROCE formula? Miss.
Return on capital employed formula is profit from operations upon capital employed. Now remember one thing, operating profit minus finance cost
That will be the
would
debit.
give what? Would give profit for the year. And this profit is
Plus na
94,500.
profit plus debenture interest cost no.
Yeah.
Then capital
So operating profit is how much? 108,000. And what is capital employed?
How do you find capital
employed will be 400,000 capital plus retained earnings plus non-current liability plus 100,000. So what is capital employed? 400,000 plus 250,000 plus 100,000. Capital employed is 750,000. So
answer the C.
108,000.
DP donkey.
Sorry, 108,000 divided by 750,000 into 100. So it is 14.4. What wrong
What?
did I do?
No, miss. It is 10 to 500 upon the capital employed.
10 to 500?
Yeah. 100.
500?
Wait a minute. This is 102 to 500.
What is 102 to 500?
That's the profit.
How did you get 94,000 plus what?
94,500 plus 8,000.
Okay, it is 94,500 plus 8,000 is how much?
102 500.
Okay, my adding was wrong. 102 500 divided by 750,000 into 100. Now in limited companies, capital employed is share capital plus general reserve plus retained earnings plus non-current liability. Okay.
Yeah.
Any doubt?
No.
Which ratio is used to calculate the efficiency of the business? Current ratio does not give the efficiency of the business.
C. Gross and
Gross margin also does not give the efficiency of the business.
Where is it?
Return on capital employed gives you the efficiency of the business, or Your inventory turnover, how quickly you are selling your goods gives you the efficiency of your business. How quickly you are collecting money from your trade receivable gives you efficiency of your business. So
Why not?
not gross profit, ROCE will give you efficiency. Okay. So efficiency ratios are the turnover ratios normally. So basically efficiency ratios are turnover ratios and return on capital employed. Profitability ratios are what? Profitability ratios are gross profit, net profit. Solvency ratios are quick ratio, current ratio. Efficiency ratios are inventory turnover ratio, trade receivable turnover ratio, trade payable turnover ratio, and return on capital employed. Am I clear? Can we go on the 18th one? What is the total equity after the issue of bonus shares? So I'm taking ordinary share capital. How much is ordinary share capital? 900,000. What would be the number of shares of ordinary share capital?
450K.
900,000 divided by 0.50. So the number of shares would be 180, 1,800,000, 1,800,000. Okay. Then the company is going to issue bonus shares. 1,000 shares of 0.50 each to its shareholders. 1,000 into 0.50. Sorry, 100,000 into 0.50. So 50,000 bonus shares. Okay, we have retained earnings. What is retained earnings? 450,000. Bonus shares would be issued from retained earnings. What is the total equity after the issue of bonus shares? So balance at end. 950,000 and 400,000. What is the total equity? 950,000 plus 400,000, 1350. When I talk about equity, I'm basically talking about shareholders' funds. When I talk about equity, I'm talking about shareholders' funds. What is shareholders' funds? Ordinary share capital, preference share capital, plus retained earnings, plus general reserves, plus securities premium. Are you all with me?
Yeah.
Yes.
We go on the 17th one.
First, in 2020, we incorrectly valued closing inventory twice, which was 10,000. So the profit increased by 10,000. Then in 2020, that was also our opening closing inventory. So our profits reduced by 10,000 there.
What are you saying?
No, our closing was 10,000. Our opening balance was 10,000 for the extra for 2021.
Figure was incorrect because $10,000 of goods had been counted twice when closing inventory was valued.
Yeah.
So income was
Increased.
Higher by how much?
Yeah, by 10,000.
By 10,000.
But then the next year, that was our opening inventory. Therefore, the profit reduced by 10,000.
Opening inventory, so expense was higher. So profit reduced by 10,000. Okay.
And then in 2021, you paid dividend 40% of profit of 2020.
So 40% of profit of 2020. That means you paid dividend how much?
Extra by 4,000.
You paid dividend 4,000 extra. So there is increase of 4,000.
Yeah. And then
Because
that,
you paid dividend extra, there is decrease in the retained earnings.
yeah, by the same amount.
Okay, by the same amount. Okay, fine. 16th, company made a right issue of ordinary shares at premium. How will this be treated in the financial statement? You made right issue, so it will be shown as equity in the financial statement. That is correct. Because you made right issue, there is a movement in the statement of changes in equity, even that is correct. Because you made right issue, there is no non-current liability because it is a part of shareholders' funds.
What do you mean by rights issued?
Right issue, that means you give shares or you sell shares to your existing shareholders
Yeah.
before it's published to the public.
before you publish outside. Okay. What will be debited in the appropriation account of partnership? What will be debited in the appropriation account of partnership? So everything that comes on the credit side of partners capital account will be debited in the appropriation account. Okay. So salaries to partner will be debited. Anything else?
No.
No. So it would be D. Okay, 3 only. Because share of goodwill written off. Goodwill is raised here and written off here. So to debit it to the appropriation account, it should be credited here. Interest on partner's loan.
The
Interest
appropriation
on,
account में goodwill doesn't come.
no. Interest on partner's loan is credited over here, but it is debited to the income statement. Appropriation account means profit for the year. Add interest on drawings. Less interest on capital, salary, commission to partners. Am I very clear? Okay. With this, I'll stop over here.